Greetings all. Welcome to my latest rendition of a 45-minute webinars. The goal is to make it 45 minutes, but as many of you and especially everyone at FX Street knows, I can run over from time to time. By the way, I don't mean to do that. I don't actively seek to run longer than 45 minutes, and I certainly don't want to be disrespectful of FX Street's everyone's time at FX Street. I get into. Hopefully you recognize I get into what I do. I enjoy it and enjoy discussing it. And actually, I enjoy conducting these conversations with many of you who participate. And so in the course of my answering questions and commenting on other comments, and of course I admit my responses can be on the lengthy side. I just tend to run over. So I'll try to limit that. And again, my apologies for that, but I hope at the times I do run past my allotted time that it's helpful. Yeah, it depends on when I start to counter, right? So welcome all. First of all, let me clarify that the purpose of this event is education. I'm not going to provide trade alerts or recommendations, but we will discuss some of the trades that materialized over the course of this day, which was Thursday. What's today? The 17th, November 17th. We're midway through November. By the way, Thanksgiving Day in the U.S. A week forward from today. A week from today, we'll have markets closed. U.S. markets closed, I believe, both those. Oh, wait, correction. U.S. markets actually open, I believe, half day on Friday. I'm referring mostly U.S. equity markets, even bond markets. I believe foreign exchange, in fact, I'm sure this, foreign exchange still trades on the U.S. Thanksgiving Day holiday. Word to the wise there, a word of warning, I guess I should say. It may not be the case this coming Thanksgiving U.S. holiday next Thursday, but we've seen in the past where some high volatility moves, high volatility relative to the normal volatility we were seeing in the currency market. High volatility moves during a Thanksgiving holiday. It's not unprecedented. It can happen. I'm not saying you should trade it. I'm not saying you should anticipate it or await that sort of thing, but it is possible. It is possible, especially given what we're seeing with some of the European bond yields. Wow. Anyone notice the Spanish bond yields today? Who was here yesterday? Who was here yesterday for my webinar, especially near the end of the webinar? And one of you, I forget who, but one of the people in attendance yesterday was talking about, or was maybe contemplating and expressed that thought, contemplating a short on the euro. Anyone remember that? In fact, I've got a euro chart with lines on it covered, but I can't read this. I'm going to go ahead and show it. And I'm looking at an hourly chart, and of course, by the time I finished my webinar yesterday, it was about 2 p.m. New York time. And let me take this euro chart to roughly the end of my webinar yesterday. About right there. Oops, I'm zooming in here a little bit. Yeah, this is where we stood near the end of my webinar yesterday, in that 35.50 area. I don't know if anyone took that shot. Again, I didn't want to be too explicit about the prospect of that being a viable trade setup, but we did discuss that area, that's 35.50 to 60 area as prospective resistance. What I had not mentioned, and I honestly had overlooked this until my coaching session today, was the red downtrend resistance line. Shame, because I normally spot such things. Do you see the basis for the red downtrend resistance line? Oops, you don't see my cursor. That would help. I'm looking at the Monday's low. I've got my cursor hovering next to Monday's low. You've got Tuesday's high there. And yesterday's London session high there. So you had a red trend line in play there as well. So that turned out to be a nice trade for those of you who took that short. Opportunity to take profit in that short in the 34.30-ish area. And of course, we hit that area around the open of the today's Asian session. So my point there was, at support in early Asian session trading, viable place to take profit, even a viable area if you chose to take a long, to take that shot long. Trade the News talking about a conference call between Merkel and Sarkozy. Talking about German Chancellor Merkel, French President Sarkozy. I'm sure you've already noticed the euro selling off here lately. So let's get that. I'm going to keep on topic here. I mean, getting distracted by some of the things that are some of the news flow emerging here, and especially some of the latest moves in the financial markets, including currencies. So the focus of this event is, as I said earlier, is to review the trades that materialized during today's prior trading session. So I already covered one, the prospect of a long on the euro in the 34.30 area. So that was one obvious one. And if I go to the euro charts here, let's do that now. Yeah, Bill, I saw that, and I'm going to get to that in a moment. But thanks for bringing that to my attention, because I don't catch everything. I'm looking at a 4-hour chart with weekly pivot points. The thicker green line at the bottom of this chart, that's the weekly M1 pivot point. I've got the weekly M1 pivot point at just about 34.30. So you got to think that's maybe part of the reason that we're seeing at least part of the reason that we're seeing the euro find support in that 34.30 area. Again, the weekly M1 pivot point, a classic support pivot point. We have daily pivot points. We have weekly pivot points. By the way, I don't show them, but there are monthly pivot points. One of the classic support pivot points, whether it's daily, weekly, or monthly pivot points, is an M1 pivot point. So so-called midpoint pivot between. In this case, it happens to be the midpoint between the S1 and S2 pivot points. And again, that weekly M1, a classic prospective source of support, and it seems to define the lows thus far this week on the euro. So weekly M1, near the weekly M1, open up today's Asian session. Wasn't crazy to take at least a short-term scalp long, and it turned out okay. I'm going to discuss the early New York morning session, but there's both a long and a short here. Actually, let me back up. One thing I wanted to cover was we did have some news flow today. One of the things that surfaced was the yield on the Spanish 10-year government bond, which I mentioned earlier, that spiked above. Actually, I don't have this. Unfortunately, I don't have this queued up on a web browser, but I can dig it up while I'm talking about it. We did talk I believe we talked in recent webinars about the Spanish 10-year government bond and how it was nearing its intraday highs established in late July, early August. Those highs, if you don't recall, those highs are around 6.4%, give or take a few basis points. Well, today the the Spanish 10-year surged above 6.4%. Now, price action on the euro didn't really line up, didn't really correlate with those moves that well, because we saw during the London session, during today's New York morning session, the euro up in spite of those elevated yields on Spanish government bonds. Nevertheless, it's still one of those clues. I mean, things like rising Italian bond yields, rising Spanish bond yields, and as we've been discussing lately, or you haven't heard me discuss it, I have been discussing it, others have discussed it as well, rising yields in even France right now. All these things, the more these yields rise, the more it implies bearishness or selling pressure, if not at the time the yields rise, but eventually selling pressure for the euro. So anyway, let's go back to my charts without indicators and talk about what I discussed in my live coaching session at FX Bootcamp. Yeah, Ralph, we talked about that too. And Ralph, you're jumping ahead of me, man. No, I actually appreciate it, Ralph, because we don't catch everything. But yeah, believe me, we were all over that. The long we discussed during my coaching session today, I've got a line of 34.30, a blue line of 34.30. What I discussed in my coaching session was a zone between about 34.20 and 34.35. Why 34.20? Well, I'm looking at the lows from today's Asian session. Today's Asian session low is right around 34.20. So I just moved this horizontal blue line in the bottom of this euro chart to 34.20. And this is another example about what I'm about to discuss. Another example of how not just me but many traders view support and resistance not necessarily as specific levels, but zones of support and resistance. Now, on this particular chart, look at price action on the left-hand side of the chart. Let me extend the chart a little bit. You notice that some of the lows, of course, the early Asian session lows today are right at about 34.20, very close to it. Other lows, not quite that low. They're closer to like 35. So let's put another line at 35 here. And I actually erased it, or deleted it, but I had two lines in my euro charts today. One at about 34.20 and another about 34.35. So what I was discussing was a 15 pip zone, kind of a cushy zone of support, where the euro could bounce from down to up anywhere in that zone. And so the long we discussed, the prospective long we discussed in my coaching session today was right here. A long just above 34.35. Maybe the entry, if you got it, was closer to 34.40. And what was interesting about that was the time at which it came together. We had so this was, it was about 7:30 a.m. New York time. It was just before 8 a.m. New York time, which is considered the standard open of the New York morning session. So just before New York session traders, or just as you might say New York session traders are getting in their charts, we have the euro at its prospective zone of support. I mean, there's nothing wrong with taking that long, folks. Again, going long, maybe just above the horizontal orange line you see near the bottom of my chart. Now, having said that, the kind of strategy we discussed for this kind of long was it's okay to take the long, but in the context of rising yields and likes of Spain today and even France, and as long as those yields remain elevated, you would likely look to long the euro, only to look to short it later, or at least if you're long, be prepared to take profit on it long or scale out of the long, and because there's likely to be levels at which bears would be lurking, sellers would be lurking. So again, the point of the lesson, I guess I might say, is that now I want to reinforce is that when you have other sources, other data, other indicators, call it what you want. In our case, one of the common sources of sentiment I've been discussing is the European government bond markets. When you have the euro rising, but bond yields, certain bond yields rising as well, something's got to give, is what I've been like to say lately. That usually doesn't jive for that long. At some point you got to think, as long as yields are rising in the likes of Italy, Spain, and even France right now, at least I question, how long can a euro rally last in that context? I mean, unless we see, some sort of news flow or commentary which would give the euro a further boost. But I myself am in these days very leery, very hesitant to long the euro for very long in the context of what's been happening in Europe these days. So, Bill, this one got away from you, and that's okay. You know what? As for me, in this environment, I don't mind letting the longs get away from me, but I do have a preference for making sure I grab the logical opportunities to short this pair. As long as we're in an environment like we're in now, with the European government bond markets doing what they're doing. Yeah, Money Magnet, I see your comment about short covering before the weekend. Yeah, it's maybe Money Magnet. It's a little early for that. But I suppose some of that could be occurring. Won't disagree with you really. So that was the case for long on the euro. Now this the prospect of a bounce on the euro was, if anything, a complement to or a confirming sort of thing for a trade on other currency pairs, which I'll give you an example in a moment. But while I'm here on the euro, I want to discuss the scenario that Ralph referred to earlier. Ralph referred to a daily R1 pivot point. Well, let me go back to the hourly chart. I already referred to this red trend line. Let me zoom in on this hourly chart a little bit here. So red trend line, based on, again, if you just simply connect Monday's low with yesterday's high, you get that. And thus far it seems to have served its purpose, seemed to have put a lid on at least part of the factor behind today's highs on the euro. So yeah, as the euro is reaching this 35.30 area, you have the red trend line there for one. Now let's go back to my euro charts. My charts with indicators, that is. And on my hourly chart with daily pivot points, let me expand that to cover up the, actually, I don't want to cover up the 4-hour chart because there's something on there too. So let me show you two charts here for the euro. An hourly chart and a 4-hour chart. So the hourly chart has daily pivot points, the 4-hour chart weekly pivot points, plus indicators. Now, Ralph mentions the weekly S1, which I won't argue with. I mean, that could have been a factor. Sometimes an S1 pivot point can be considered a resistance, but maybe a secondary factor, I would guess. What struck me was a daily R1 at 35.30, the red trend line I mentioned earlier on the hourly chart for the euro that I just showed you a moment ago. And if you look at this 4-hour chart, a one perspective source of what I call dynamic resistance, sort of a moving ceiling for the euro, at least a perspective moving ceiling for the euro. That's this downward sloping bright red line representing the 4-hour 21 EMA. And by the way, I speak from time to time in reference to moving averages like a 21 EMA, 55 EMA. I know this. I know the standard for other traders are nice round numbers like a 20 EMA or a 60 EMA, and some use a 50 EMA. Not much difference there. Not much difference. For example, whether you use a 20 EMA or 21 EMA, doesn't matter a whole lot. I mean, the difference is negligible in terms of where the moving average would be located. If you're wondering about the purpose of Y21, Y55, those are Fibonacci numbers. Those are numbers in the Fibonacci sequence, and our chief currency coach came up with the idea that this kind of become a standard at boot camp to use those two moving averages based on the Fibonacci sequence. So anyway, that was the basis for not only profit taking on the long we discussed in the 34.40 area, but it was also the basis for the short. Now, one other thing we discussed, at least I discussed in my live coaching session in FX Bootcamp, was recognizing patterns of price action. And speaking of patterns, you can actually see that. You can see this pattern on this 4-hour chart. But let me go back to a chart without indicators to emphasize this point. And I think I'm rearranging my charts in ways I don't want to. The pattern I'm talking about, let me find another chart without indicators to make this point. I could probably make it on this 4-hour chart. I'm sorry, on this 1-hour chart. What struck me the past couple of days. So let me just literally tell you what I discussed in my coaching session today. What I noticed was, first of all, Monday and Tuesday, broad sell-off both days. Euro certainly more down than up, both Monday and Tuesday. But even Tuesday, during Tuesday's New York morning session, the euro was relatively range bound. And I can't really show that here because there's no delineations on this chart by day here. But I can tell you that largely during the New York morning session on Tuesday, the euro was sort of trapped, sort of range bound. And some of you may recall yesterday the same thing. By and large, and I discussed this in my New York session video review posted on the Forex Street blog yesterday. Same sort of thing. The euro was we saw more price action yesterday on the euro during the Asian and London sessions. Euro USD during yesterday's New York morning session sort of range bound. So my point is this: it's not crazy to assume that patterns like that, patterns of price action by time of day, might repeat themselves until something changes. So, I mean, I largely expected the euro to continue this sort of kind of range-bound price action like we've seen, like we saw yesterday and to some degree the day before. And, without any major news, without any new developments from the likes of Europe to change the story, it's reasonable to expect more of the same. Now, you might say, well, Curt, what about the Spanish 10-year yield spiking higher? Yeah, I can't disagree with you. That's notable, and that could become something significant. But, right or wrong, the market hasn't done anything much new with the euro in response to that, at least not yet. Now, I will say this right now. Let me go to a 4-hour chart here. Does anyone? Let me see if I got this right. Oh yeah, it was here. It was this move here. This is a 4-hour chart, and my cursor is moving up and down next to a fairly big leg down on the euro. He's fairly big for a single day. Anyone remember that move? This was last Thursday. Last Thursday's sell-off. Was it Thursday or Wednesday? I thought it was Thursday. That I discussed this in the webinar, I believe, that day at FX Street. That was the sell-off, seemingly triggered by LCH ClearNet raising margin requirements across the board for Italian bonds. And so the question mark, at least in my mind, and certainly in the minds of plenty of other traders, is: are we approaching a similar scenario for Spanish government bonds, and what might it mean for the euro if a clearinghouse such as LCH ClearNet does raise margin requirements for Spanish bonds? And let me give you some perspective by having to open this up yet, and I'm about to. I'm going to open up a chart from Bloomberg.com for the Spanish 10-year yield. By the way, I'll love to tell you right now what I'm doing. What I'm typing in the background. I could probably dig up from my web browser history the web page on Bloomberg.com, which shows the history of the Spanish 10-year government bond yield. But the simple way I used to find it, I Google the terms Spain 10-year yield Bloomberg. That's what I do. Spain 10-year, 10-year yield Bloomberg. And one of the first search results is the Bloomberg webpage that I'm about to show you. Yeah, Gam, that's a good quote. I see your quote there, Gam. I'm actually having trouble grabbing this web browser and shrinking to size. Now, the chart I'm about to show you for the Spanish 10-year yield isn't updated. It doesn't reflect today's pricing. But what I wanted to show you was some of the historical data here, going back several months. So the chart you now see shows price action through yesterday. And when I mentioned earlier that the intraday highs for the Spanish 10-year bond yield were around like 6.35, 6.4%. You should see my cursor hovering near that now. So we had a peak in Spanish bond and the Spanish 10-year yield in late July, early August, and you see that sharp drop. That sharp drop is essentially the ECB stepping in to buy those bonds. I mean, not entirely, but that was a significant factor. The ECB ramped up its bond buying program, known as the Securities Markets Program. The ECB ramped up that program in early August, and since then, Spanish bond yields have made up that have filled that gap, so to speak, have not only gone back up to levels last seen in early August, but today spiked higher above those levels seen. And so actually you can actually zoom out and actually look at a 5-year chart for the Spanish 10-year. And I'm thinking what I'm about to show you shouldn't surprise any of you. I mean, we're at levels not seen for years. In fact, this chart doesn't go back far enough. We're at levels, I don't know that we're at record highs, but we're certainly, I believe today we reached a post EMU record high on the Spanish 10-year. Probably at the highest level seen in something like 15 years on the Spanish 10-year. So what does this mean? When I mentioned earlier the prospect of a clearinghouse raising margin requirements, what could that mean? Well, if the spread or difference between the Spanish bond yield and yields on AAA rated bonds, I believe the clearinghouses use a basket of AAA rated countries and their bonds as a basis for determining this criteria. But I'm going to keep it simple here. I'm not going to get too explicit about this, but if the Spanish 10 yield gets too much higher, one of the baseline is like 500 basis points or 5%. If the Spanish 10 yield gets too much higher than the yields for a AAA rated country like Germany, for example, then a clearinghouse like LCH ClearNet can make a decision to raise margin requirements for Spanish bonds. And again, right or wrong, that could trigger, at least for a day, a sell-off on the euro. If in fact history repeats itself and we get a similar sell-off like we got last Thursday in response to the move LCH ClearNet made with Italian bonds. So it's possible. It's certainly possible that we see a similar move by LCH ClearNet or another clearinghouse on Spanish bonds if Spanish bond yields go too much higher, and we could see some corresponding price action on the euro. Yeah, I see your latest comment. Money Magnet, I saw that. Money Magnet, I'm responding to Money Magnet's comment about the rumor that the ECB is going to lend to the. Doesn't it sound silly? I mean, I understand why. According to the current EU treaties, the ECB cannot lend directly to governments. The ECB cannot lend directly to governments. So it strikes me as sort of a backdoor way around. It's a simple, quick way to do to facilitate getting funds from the ECB eventually. But well, for one, Germany seems opposed to that. Germany still seems opposed to ECB doing anything big, anything significant. Number one, and number two, it doesn't sit well with me. I just It seems like if they do that, it's still going to be more of a band-aid fix. I can't imagine even in that environment, even with that sort of scenario or that sort of structure, that the ECB would get big enough in their bond buying or in their lending into the IMF, who in turn buy bonds in Europe. I can't imagine the ECB would still in that structure go big enough. It strikes me that either the ECB or the Germans or whatever if that scenario were approved, that they would put a cap on it, that they would limit how much the ECB could do that. But again, for now the Germans will say no, that's not going to happen. They're opposed to it. Now, could their view change? Yeah, I think it's possible their view could change, and many do think that if the Germans eventually come around and loosen the reins a little bit and let the ECB step in a bigger way. Well, Money Magnet's simple answer to your question, how can the bonds get higher? Well, if there's enough selling, yes, they can go higher. But yeah, it depends quite a bit on, who's going to step in. Who's going to step in and simply backstop these bigger countries. So anyway, I meant to get to this is a good time to do this. I meant to get to another trade. We discussed during my live coaching session today at FX Bootcamp relative strength analysis. Let me take you to the set of charts we were looking at. And in fact, I'm gonna set those charts the way they were set up during my coaching session, or at least close to it. I'm gonna go to a set of yen crosses here, and I might have zoomed in on this a little bit. Maybe go to an hourly chart. What I noticed, and I may not be able to show the charts in a way that would make it obvious, but what we discussed in my live coaching session today, I'm adjusting these charts, that's why I'm kind of stalling here. We discussed how the so-called commodity currencies, the Australian dollar, the Canadian dollar, even the Kiwi, all looked weaker today than the European currencies like the euro and the British pound. Now, how did I know that? And I'm trying to think where we saw price action. I think maybe this euro would, if I remember this right, would provide the clue to that. We were, it was right in here, I believe. Where let me get this. Let me establish this. So 700. It was more than that. It's right about there, 1500. Let me draw an equivalent line on the Aussie chart. Okay. Yeah, here's what I noticed, and it may be a little difficult to see, and my apologies for that, but what I was discussing during my live coaching session today was the euro-yen at about 5 hours ago. The euro-yen was approaching its London session highs about 5 hours ago. By comparison, it's sort of a subtle thing, but by comparison, the Aussie yen was nowhere near its London session highs. So the conclusion I drew from that, again, I know it's a subtle thing. And actually, let me give you a basis for a comparison here. Apologies for the pause because I'm adding some lines to this chart. Okay, that's about what that's about right. That's what I had in mind. Okay. So here's what I discussed in my coaching session today. I've got this chart probably zoomed out a little bit, but I'm going to give you some context. So I can zoom in on these charts a little bit. I'm looking at the Aussie yen charts and the euro yen chart. These are hourly charts without indicators. Here's what I noticed, and it's a subtle little thing, but this is I looked at things like this for clues on relative strength. What currencies are strong and what currencies are weak. Look at the drop and then subsequent rise on the euro yen between the red and blue lines. So euro yen dropped in early London and actually late Asian, early London session trading, and then rose back up. Well, notice how the euro yen dropped and rose by about the same amount. In other words, the euro yen dropped by 50 pips? And then rose back up about 50 pips. So the euro yen essentially made up all those earlier losses. Well, compare that to the Aussie yen. The Aussie yen dropped by about the same amount, 60 pips. The Aussie yen did not make up those losses. The Aussie yen was still notably lower than its earlier levels. And we saw the same sort of thing for the pound yen. So my point was this: I drew a conclusion based on analysis that, at least at the time, now of course things can change, but at the time I thought, well, maybe the commodity currencies are broadly weak today. Now, what does that tell you? What can you do with that information? Well, the conclusion we drew was that maybe you look for opportunities. If you see reasons for the dollar to get weaker, you would look to sell a dollar against the European currencies like a euro or like a British pound. If you see occasions where the dollar could recover, especially against the euro, I like using the euro as a sort of baseline for what the dollar is going to do. If you see a situation where the dollar could recover against the euro, and you expect the dollar recovery from that, well, if you're going to buy the dollar, why not buy the dollar against a currency that's been relatively weak? And again, based on this kind of rough analysis here, maybe one of those weak currencies is going to be a commodity currency, like the Australian dollar, like the Canadian dollar. And this took us to, led us to dollar CAD as one example. Let me take you to dollar CAD charts. We talked about a couple of different trades on that pair. Yeah, Ralph, you mentioned the Kiwi. We discussed the Kiwi as well. Now, I will say this, Ralph. Here's one of the quirks with doing relative strength. Sometimes you'll find, let me find the dollar CAD here charts. Sometimes you'll find a currency that's very weak, and especially if you have reason to believe it's going to be weak, it can turn out to be the better trade in terms of degree of movement or magnitude of move. But sometimes when you pair up the weakest currency against a strong currency, sometimes the move is such that there's no easy, simple, technical way to get into the move. Does that make sense, Ralph? Sometimes the pullback. Let's say we have. Let's just use the example, just to keep it simple. Euro USD, weak euro, strong dollar. If the euro is really weak and the dollar really strong, and sometimes I've seen markets where the euro drops so much so fast, or drops or falls consistently. There's no pullbacks. There's no clean-looking, logical, technical pullbacks to get yourself into a short. I mean, I've had days where I have sought. I've seen a scenario like that where the euro's weak, dollar strong. I thought, okay, great, dollar strong. I mean, maybe the euro's too weak. Can I find a currency that's more neutral, or maybe even a little bit strong, so I can insert myself in a dollar long trade? Now, if I've just confused many of you, don't worry about it. Ask me about this in the future. I can maybe cite some examples, and we can build your knowledge there. But, the Kiwi might have been, I haven't looked that closely at the Kiwi charts, but the Kiwi might have been one of those examples today where it was weak enough that, unless there was an obvious technical entry, sometimes those are it's tougher to get in a situation where you have a notably weak currency against a notably strong currency. But the dollar CAD we discussed today, let me explain the perspective for the dollar CAD trade today. First of all, there was a logical short in the 1.0280 area. Look at the 4-hour chart on the right-hand side of this view with weekly pivot points. See the thick, bright red line? That's the weekly M4 pivot point. I just discussed earlier a weekly M1 pivot point. M1 is a prospective support pivot point. M4, a prospective resistance pivot point, sort of a prospective ceiling for, in this case, for the dollar CAD. And notice how there was a ceiling earlier this week, and there's been a ceiling again today. And that wasn't all. That was not all going on in terms of a prospective source of resistance around 1.0280 for dollar CAD. So let me go back to let me go to a dollar CAD chart here and show you. I think it was a daily chart that had this. Here we go. Yeah, this is what I was looking for. I see a red trend line. Got a red trend line out, and this is a daily chart for dollar CAD. This red trend line goes back to at least. I could probably make a case for taking it back farther. But this red trend line goes back to at least mid-May of this year. So this trend line has been resistance through the spring and summer months. It was support on one or two occasions over especially in late September, and it's been resistance more recently. That red trend line does come into play again around the weekly M4 pivot point, around yesterday's highs, around the 1.0280 area. And I can go to an hourly chart here. And of course, some traders will look at this hourly chart and look on the upper right-hand portion of the chart and say, well, it's a double top of what was it, Tuesday's high? I'm sorry, maybe yesterday's high. That's all it is. Yeah, I won't argue with you, but I don't know about you, but I see it as a lot more than a double top. A lot more than a double top here as the basis for the short. So that was the short on the dollar CAD. But remember when I discussed earlier, we said that I saw signs that the commodity currencies were broadly weak to different degrees, as Ralph has pointed out. The Kiwi was one of the weaker ones, but broad weakness in the commodity currencies. Well, a dollar CAD short is all fine and good, but the preference would be, if anything, to long that pair. Long dollar CAD means you're betting on a weaker Canadian dollar. So arguably the better trade from a pure relative strength perspective was to seek to long this currency pair, long dollar CAD. And let me go to a 15-minute chart. And maybe it's just me, but it seems I could put a line right about there, just above 1.02, the psychological level. This is I just switched to a 15-minute chart, by the way, on dollar CAD. This is a dollar CAD 15-minute chart. Look in the middle of this chart at this price action, where the dollar CAD is flipped from either up to down or flipped from down to up, just above 1.02, the psychological level. My horizontal orange line is at 1.0211, but you get the idea. But in the 102, the 1.02, 10 to 15 area, this pair has flipped before. I'm highlighting some of those examples. So it was not crazy, and I'll put two arrows here to highlight this. It was not crazy to take a shot long on dollar CAD just above that horizontal orange line over here on the right-hand side. Now, it was a trade that took some patience. We got it was a bit choppy for a while, but finally near the end of the trading day, it took hold. We got a rally in the dollar after London close. Euro Aussie, I could look at that. What do you think, though? If there's anything else I want to cover, first. And by the way, the profit target for the dollar CAD long, well, we're here. This is it. If you, it wasn't crazy to take profit if you treat it as a so-called spot trade, to consider the weekly M4 pivot point as your target for the dollar CAD long. So notice, folks, we had trades kind of both ways today. Whether you were dollar bear or dollar bull, long on euro, short on euro, short on dollar CAD, long on dollar CAD. It was just that kind of day. And again, we talked about how the dollar in general, and we talked about euro and USD in particular, how it's been sort of choppy, sort of range bound. And this, by the way, this is the only week it's done this. I recall it was a couple weeks ago, maybe it was just last week. I think it was a couple weeks ago where we saw a sharp euro sell-off, on the euro USD over the first couple of days of the week, and then the euros sort of consolidates. We get more range on price action, and that's exactly how this weekend's unfolded thus far. Same sort of thing this week. Carlos, when in response to questions like that, when you say, "Can you take a look at the euro Aussie?" That's such a. I'm not being critical of you, and I don't want to sound critical. I don't want to make fun of you, but that's a fairly generic question. There may be. Are you looking for something there? Do you have some specific goal or something that's puzzling you about that chart? Can you provide clarification? I guess is my point. In the meantime, I can open up the chart. Got to find it first. There it is. Man, it's certainly going up, right? Tells you something about the Australian dollar, doesn't it? Tells you a lot about the Australian dollar, actually. By the way, these are lines from other charts. Don't make too much of these lines. These lines are based on the valuation of price action on other currency pairs, not the euro Aussie. In fact, I probably should go to a different chart with all these markings and a cleaner looking chart. Hey, Bill, I see your latest comment, too. I'll try to get to that before I wrap up here. Great. Well, you know what? Let me get rid of this. Dropping some lines I may regret dropping later, but that's okay. I don't know, Carlos. What do you want to know? I mean, I have seen this euro Aussie. I mean, we are in an interesting area. Maybe that's why you're asking this. This has been an interesting area for the euro Aussie, call it the 134.50, 135 area. Maybe I should go back to a weekly chart here. And the weekly chart doesn't help too much. Again, I'm not sure what your objectives are, Carlos. Is it you're looking at near-term trades or looking for a broader clue as to because here's what I think about when I look at the Euro Aussie. First of all, we know there's problems in Europe, right? But in spite of the apparent problems in Europe and some periodic pressure on the euro, in the past several days, the Euro Aussie's been rising. Well, maybe that's a reflection of more a reflection of Australian dollar weakness, right? I mean, that makes a lot of sense. So why would the Australian dollar be weak? Well, have you seen some of the data from China lately? Have you seen the Shanghai Composite? That could be a big reason. Now, so here's my dilemma. Here's my dilemma with trading this pair. I'm a bit concerned by. Well, you can trade this. I mean, certainly you can trade this pair, and it trades technically just like anything else. In the grand scheme of things, though, I can see where some days, and you can see this on the lower right-hand portion of the chart, how we've gotten some daily candles which have been rather wicky. I can see some days where this pair can be very difficult to trade, and the reason why is you think about the driving forces behind each side of this pair. The euro, obviously, sovereign net crisis in Europe. We can see we've seen days, and we can see days in the future where get a broad euro sell-off. On the other hand, you have the Australian dollar. I just asked the question rather than just blurt it out and say it. When it comes to Australia's economic prospects, who is Australia most tied to? What economy is Australia most tied to? I mean, I know many of you know this, so it's just keeping it sharp with a little pop quiz. Yeah, China, exactly. And you face the prospect of, there's been some talk about China slowing, and not just talk. It's you see it in some of the data, some evidence of China slowing. And of course, if you don't know, you can also maybe glean some insights or glean some suspicions at least from looking at the Shanghai Composite, which has been under pressure of late. So my dilemma here is that you're facing two currencies which, for different reasons and different days and different weeks, may be weak in their own right. So I mean, day to day, I suppose you can trade it, but depending on the basis for your trade or the lower longevity of your trade, you know what? There's kind of a choppy price action, like up 1 week, down the next sort of thing, or days when we get spinning tops and go nowhere. A lot of that could return. This pair, I can imagine this pair really moving in fits and starts, depending on the mood of the day or depending on the news of the day. Yeah, Carlos, you mentioned the trading range for the euro. Well, you can argue that there's some reasons. I'm not, it's debatable how significant each reason is, but you can argue there's some reasons why the euro is doing what it's doing. By the way, Bill, you asked earlier about a trend line. I don't know what trend line you're referring to, but I'm back at the euro chart. Maybe you're referring to like a near-term trend line. So why is the euro holding up? Oh, maybe you're referring to this one, Bill. You're referring to something like that. I'm not sure over what duration your trend line you're referring to. So why would the euro hold up? Well, remember, we're dealing with two currencies here, two sides of the equation. And maybe not the only way or best way every day, but one way I look at it is, I'm contemplating policies of, two central banks here. Federal Reserve on the U.S. dollar side, the ECB on the euro side. For now, we've known for some time now that obviously the Federal Reserve has a more accommodative, looser policy, suggesting if anything, dollar weakness means up for the euro USD. Now, we face the prospect, although it really hasn't materialized yet, we face the prospect of the European Central Bank turning more accommodative, lowering rates, but it's so debatable right now what more that the European Central Bank will do. And as I see it, that's the lemon right now. The question I'm still weighing in my mind is, how big will the ECB go? Or will they do much more than what they've been doing? One theory that's been floated out there is that that Germany will just will not allow the ECB to do much more than what they're doing with its bond buying program, and maybe there's going to be limits to the bond buying program, and so we morph into a situation where, if Europe's not going to do enough quickly, that the Fed steps in. And if the Fed steps in, massively increases swap lines, or even goes QE3 or whatever, that's going to mean up for the euro USD, you would think. So there's that prospect. Yeah, one Fed is enough. Ralph, I won't disagree with you there. Again, now, by the way, Ralph, be careful with that. I'm not saying you don't have the right perspective. Maybe you do. Maybe I'm gleaning too much from your comments, but it's something even I had to watch on myself, being too judgmental about what should happen. If I were in control of the ECB, or if I were a leader in Germany, or if I were in control of that, what would I do? I play that game all the time, but I suggest maybe you weren't playing that game, but if you find yourself getting almost frustrated with what some of these officials or central banks are doing, folks, that's not the best use of your energy, not the best use of your focus. Now, if it helps for you to get into that state of mind in order to theorize what might happen, then great. But remember, you are as a trader, you are paid not to imagine what the world should be like, or what you would do if you were king or queen, or if you were in control of some central bank or whatever. It's to imagine to what moves will occur next, even if those moves are the wrong moves by, say, central banks. Or better yet, what you're really paid to do, and this is a reference to John Maynard Keynes, the famous British economist. He once said, successful investing is anticipating the anticipation of others. It's worth repeating. Successful investing, and I would argue trading, is anticipating the anticipations of others. So in that context, I like to think of, okay, what I want to anticipate what other traders are going to anticipate, and get in on that before the mass of traders get in on it. Again, it really is. I agree with that. In reference to your comment about the contest of different schools of thought. And it totally is fascinating. Totally fascinating. Folks, this, if I haven't made it clear enough, this situation in Europe, and some credit to Merkel, German Chancellor Merkel, and she's made some recent comments about how long this could play out. They could take years. And I have to agree with that. I mean, certainly I don't agree with everything Merkel said, or Sarkozy said, or for that matter, plenty of officials in the U.S. and what they've said or haven't said or done or haven't done. But I do agree with the prospect, with the outlook that this situation in Europe, and maybe can have some ripple effects in other countries, or maybe the U.S. Maybe the market spotlight turns to the U.S. eventually here. I mean, this whole thing, this whole kind of aftershocks of the financial crisis, which are going to be really hit hard following the Lehman Brothers bankruptcy, this could be playing out, folks, for years, many, many years. And for us, make for some great trading. So, Ralph, yeah, you said you're only a trader. So, So, Ralph, I want to make sure that you and anyone else recognize you need to be neutral. Think of yourself as an observer. Think of yourself as an observer. Now, I admit for some it may be more difficult than others, because I admit it's maybe a little easier for me to look from the outside in, being that I'm a U.S. citizen. I live in the U.S., so I'm looking at Europe from the outside in. Now, I can actually see some advantages of living in Europe, and get, gleaning some clues, maybe from the local media, maybe from other traders in Europe, or maybe maybe you have contacts at banks for the lucky souls who have that, or contacts at hedge funds, or contacts in the city of London, whatever, that could help you get drive some interesting clues and help you formulate a bias or trading opportunities. But I can also see where in some cases maybe a European is how should I say, gets a distorted view of what should be. I'm going to give you a quick example of that, and I'll try to make this quick because I recognize I'm gone beyond my normal a lot of time, and I apologize for that. In fact, I've gone 10 minutes beyond. Holy cow, where did time go? I'm so amazed that I can sometimes I'm still amazed that I can fill 45 minutes of time that easily. Sometimes I start these sessions thinking, what the heck am I going to talk about? And here I am 55 minutes later, and I'm like, I'm not even done yet. Where was I going to go? There was a member, and I think he's still in from time to time, a member at FX Bootcamp said in recent months that they could not imagine why the British pound wasn't weaker than it was at the time. And I can't remember what the time was, but again, this person thought that the British pound should be so much weaker than what it was at the time based on conditions in their environment. And, my response was something along the lines of, well, first of all, you can't look at what the market is doing or should be doing based on your perception of local conditions, whether those local conditions are your own backyard or your own city or your own province, whatever it is, states in the U.S. or even the entire country. Money flows where it flows and for reasons that may have little to nothing to do with the current reality in that in your prospective area. So these are clues, by the way. There are clues to be gleaned from observing how your country's economy is doing, but it's not the only driver when it comes to currency flows, and especially consider this. Remember, currencies are relative. Currencies are relative. That's worth repeating one more time. Currencies are relative. If for whatever reason enough traders, enough investors, enough funds, enough people consider the UK a more reliable destination to park their money in whatever markets in whatever ways, if the UK is considered a better bet than enough other countries, enough other economies, the pound can strengthen. Just heard Trade the News say something about a rating. I don't know if that's for one of the countries we deal with or not. Oh, Brazil. Okay. Brazil raises the rating for, S&P, the ratings agencies raised the rating for Brazil. So, folks, that really exhausts about all my time. And if I've overlooked or questions or comments you made previously, I apologize for that. I don't intend to do that. I don't like doing that. But I do get wrapped up in my discussions and my answers to whatever I do see. So I hope that those responses have helped. Yeah, Cam refers to the currency wars, the race to the bottom, as some like to say. And that's one reason why I think that another of many reasons why I think we're going to be this is going to make for some good trading for quite a while in currencies, because it's a zero-sum game. Not every currency can get weak all at once. We're going to have some winners and losers, and it could be a situation where, be it central banks or governments or whatever, are going to continue pursuing policies that benefit their exporters, especially in more countries than others, some countries more than others. And that means as policies change and evolve, that means shifts in currencies. Some get stronger, some get weaker, and that means good trading for us. And if you think, I just don't see that we're at a phase yet where things are going to return to some sort of new normal. I mean, there's still a very slogging, slow economic recovery in the U.S., if you want to call it that. Some of you've already mentioned the UK, and we know what Europe's problems are. So maybe the challenge when it comes to a pair like the Euro USD is, maybe part of it is the markets, waiting for something to give. To some degree, it's the Euro's woes have already been priced in, but we haven't gone over the cliff and gone into some sort of Armageddon territory yet. Maybe only a matter of time. Oh, but I'll wrap up with this. Again, remember the thing I mentioned before, where at least I think I mentioned it here. Sorry, sometimes I get mixed up between my live coaching sessions and these sessions set up straight. That it might be some of the things being done by the Eurozone banks to build up some cash and recapitalize. There's been selling of USD assets and swap lines with the Fed. And by the way, I don't have time to discuss this in great detail, so I apologize for that. We can talk about more about this at one of my webinars next week if you want more details on this. some of the things, there's some theories out there, some ideas out there, which seem viable anyway, that because some of these European banks, particularly like French banks, are having more and more stress, or encountering more and more problems drumming up cash. And remember, these banks have to recapitalize. They need to build up more capital. And so in some cases, you have banks selling U.S. dollar assets, and there's some repatriation flows involved in doing that, converting those dollars received from selling the assets into the euros. That could be given a boost to the euro against the dollar. Also, there's some of the transactions involved in borrowing dollars from the Federal Reserve via swap lines with the ECB. That could have a lift in the effect on the euro USD as well. If and when those sorts of transactions, which might be giving a lift to the euro USD, when those transactions subside or go away, then the floodgates may really be released on the euro. Very possible. But with that, I have to leave you. Again, I've gone way beyond my normal time. I apologize for that. Thank you very much to Epic Street and everyone there who's made this event possible. Thanks to each one of you who participated. Again, apologies for missing your comments. I'll remain, if this room remains open for any much longer, I'll stick around and feel free to ping me with a question or comment, and I'll take a look at it and see if I can give you a viable answer. Take care, folks. Good luck trading tomorrow. Cheers.